Would you like to invest in a truly passive commercial real estate investment for the next 15 years where there are no management responsibilities, no landlord duties, no evictions, no toilets to clean? It's like clipping coupons. It's like getting mailbox money on a monthly basis. Does that sound too good to be true? Well, it's not. That's what we call a triple net lease investment. Let me go to the board here and illustrate to you exactly how a triple net lease works. When you go to a Starbucks, someone owns the Starbucks. Starbucks doesn't own the building. There's an individual who owns it. Let's say it's you, right? So Starbucks pays you a lease payment, let's say $20,000 a month, okay? Now, under the triple net lease terms that last for like 15 years, Starbucks pays for all of the expenses. That's the best part of the triple net lease. Starbucks pays for your insurance, your taxes, all the building repairs, the parking lot, the windows, the roof, electrical. They pay for everything, right? So you get a $20,000 a month lease payment from them. That's you with the smiley face, right? So you get the $20,000 a month lease payment. You pay your mortgage if there is a mortgage, and the remaining is your cash flow. That's what we call a triple net lease, where Starbucks, again, does not own the building. They're just a tenant. They pay you a lease payment of $20,000. You pay no expenses because under the triple net lease terms, Starbucks pays for all of the expenses. You just pay your mortgage and the rest is cash flow. No landlord responsibilities, no management duties, no evictions, no toilets to clean. It's like getting mailbox money. Now, to further describe this to you, I'm sure you've been to a large grocery chain. Most likely that large grocery chain does not own the building. They're just a tenant, and they pay the owner of the building a triple net lease payment, and that grocer takes care of everything: taxes, insurance, repairs, everything. The same goes for restaurant chains, banks, right? Single buildings. Large banks are not the owners of the building. Okay, there's a landlord who owns the building, and the bank leases from the landlord. Dollar General stores, auto parts stores, and so forth. So in this video, I'm going to share with you all the pluses along with the minuses of triple net leases, all the advantages, all the disadvantages of triple net leases, all the pros and cons, and most importantly, when it's time for you as an individual investor to get into a triple net lease investment, and I think probably more importantly is when not to do them. All right, that's what this video is about. Hello everyone, I'm Peter Harris. I'm with Commercial Property Advisors. I am the author of my best-selling book, Commercial Real Estate Investing for Dummies. I also have my new bestseller, Commercial Real Estate for Beginners. And guess what? Now we have the #1 rated YouTube channel, most watched ever on commercial real estate investing. And that's because of you. So thank you so much. I'm also a coach and mentor to many commercial real estate investors all across this great nation of ours. So in today's video, I'm going to share with you the truth behind triple net commercial real estate investments. Let's get started. Here we are, the truth behind triple net lease commercial real estate investments. I'm going to share with you the pros, the cons, and when it's time for you to jump into triple net lease investments or perhaps not. All right, so let's start with the pros. As I mentioned to you just a few minutes ago, one of the great advantages of the triple net lease is the lease will last 15 to 20 years. And within that lease, every 5 years or so, you're going to have rent increases. So over these 15 to 20 years, you're going to have rent increases that go up incrementally, and they are fixed within the lease. So that's a great and huge thing. Number one, as I mentioned before, no landlord duties, because your tenant pays for all the expenses. Again, they pay for taxes, insurance, repairs, the roof, the structure. They cover everything in the building. So there's nothing for you to do other than collect your check, pay your mortgage, and then experience the cash flow. Stable cash flow. Because of these three things, the long-term lease, no landlord duties, which the tenant pays for all the utilities, all the expenses here, this cash flow can be very stable, if not increasing year by every 5 years because the rent increases. So great advantages here. Lastly, you have a low turnover. Because they are in for such a long time, you don't have to worry about, like you do in apartment buildings, where the tenants last on average a year to 18 months. Here, they last for 15 to 20 years. Got it? All right. Now, for some of you, the triple net lease may be the ultimate goal. You may have invested for 20 years in your single family homes, in your apartment buildings, and worked your butt off, and now you're pretty successful, but you're still involved in the day-to-day doings of owning those rental properties. Now you think maybe you ought to back up a little, retire perhaps, and it will be ideal for you to go into triple net leasing, lease investments, because of all of these advantages. But there are cons, there are minuses, there are disadvantages to all of these pros. Here they are. Number one, there's a risk when the lease ends. Let's say that in your triple net lease property you have 4 tenants, right? You have a hair salon, you have a shoe store, you have a big grocery chain store and a pharmacy. Let's say that the grocery chain store, the lease ends after 15 years and now they're gone. So now you have 3 out of 4 paying rent, but your largest tenant paying the most rent is gone, and you have a big empty dark building and they paid the most rent. What do? That's a risk. Let's say that you have a triple net lease on a bank, right? So single tenant bank, and the bank moves out. You are now 100% vacant. So you have big problems here. So this is the risk to doing triple net lease investments is what happens when the lease ends, right? So there's lots of planning involved to overcome and mitigate that risk, but it's still there, still there. Next is the high capital cost when the lease ends. Let's say you owned that bank building and the bank, the lease expires and move out. Now you have to get everything ready inside the bank building for a new bank or a totally different store. And guess what? Those costs are yours. So you're paying hundreds of thousands of dollars to get that building ready for the next tenant, right? So that's a con. Next is you have limited upside if the market gets hot. Because you want a long-term lease that's fixed with increases, if the market gets hot, there's nothing you can do. You can't take advantage of it. You can't break the lease and increase the rents. You are, when the market gets hot, you are held to these terms here. Okay, so there's a limit to the upside here. And lastly, all triple net leases are not created equal. Let me tell you this, or ask you a question. Would you rather lease your single tenant building to Starbucks or to Joe's Coffee, who has only one store? Of course, you want to lease to Starbucks, because if they close down the store, they will write you one check for the remaining 10 years. If Joe's Coffee go out of business, that's it. You're left with an empty building. Even though both are triple net leases, Starbucks will guarantee nearly all the rent that's remaining. These guys, they can't, because they're mom and pop. Got it? Okay, so pros and cons. Next is, who is the ideal person to do or to jump into a triple net lease? In my opinion, it's a retiree looking for stable cash flow to live off of. Let me give you an example. I have a very good friend. She has owned her apartment buildings since we were kids, actually, maybe in our 20s. She inherited from her dad. She's an awesome person, wonderful job, great steward, right? But last week she did ask me, Peter, what do I do when I turn 70? I don't want to continue to operate these apartments because there's so much work. And I mentioned the triple net lease to her, right? So she is the ideal person for a triple net lease, because now she's ready to just kind of pack it in, do something that's extremely passive so she can enjoy the future grandkids. So she loved all these pros, and she understood the cons. So in a few years, she's going to consider the triple net lease as a retiree. Next is, you're going to sell your, watch this carefully, you're going to sell your 5 cap rate property and buy an 8% triple net lease property out of state. Let me explain. If you are in a high price area like I am in California, you're going to sell your high price, your low cap property, your high price property with all the equity, right? Maybe not producing a lot of cash flow because the price is so high, right? And you're gonna maximize your equity here by buying an 8% triple net lease out of state in the Midwest. So you're gonna sell your high price property in California and you're gonna buy a strip mall or a bank building or some triple net lease buildings out of state in the Midwest or in the Southwest, someplace, right, to maximize the equity here, okay? So this is ideal for a person who has a high price property, lots of equity, to now maximize their equity with cash flow while kicking back, right? The third type of person is when you're ready to park your money. What I mean by that, if you are so lucky to be a trust fund baby, if you received a large inheritance and you're not sure where to put the money, but you need to put it someplace to start earning 4 to 5 to 6%, you would put it into a triple net lease investment for the next 15, 20 years. Got it? All right? Or sometimes international investors will take their money out of maybe a very unstable environment like in their foreign country, and they bring it to the most stable country, United States, and invest it into a 15 to 20 year triple net lease property. That happens a whole lot in this country. Got it? All right, so that was the pros, this is the cons, and this is how it applies to the person looking to get into or jump into triple net commercial lease investments. All right, hope you enjoyed the video. If you want more videos like this, please go into our website, commercialpropertyadvisors.com, or simply subscribe to this YouTube channel. Thank you very much, everyone. I'll see you at the next video.